This week, we could learn if the Federal Reserve will move forward with its planned interest rate cuts. You may remember in December, they announced plans of several cuts this year, which economists originally projecting the Fed was on track to reach their goal of 2% inflation sooner than expected. Let's take a look at the numbers. The GDP rose 3.3% in the fourth quarter. That's a huge jump. Obviously falling short from quarter three's 4.9% increase, but still better than many expected. Several months ago, everyone was predicting a recession in 2023. Remember that? Everyone from banks, hedge fund managers, even the World Economic Forum predicted that. Well, let's fast forward to today, where now we have headlines like these that you have on your screen, where everyone is asking how so many people got it so wrong. But policymakers must decide when they should pivot to support the economy without risking a potentially dangerous rebound when it comes to inflation. Joining us now to discuss this is money coach Lynnette Khalfani-Cox. Lynnette, welcome.
Thank you for having me, Hena.
Policymakers have to decide when they should pivot to support the economy without risking that dangerous rebound in inflation like we mentioned. The Fed held rates steady during the last meeting in December of 2023, as well as September, as well as November. Lynnette, what do we expect this week?
Same thing.
Yeah.
I don't think that we're going to see that rate cut that so many people would love to see, certainly that Wall Street traders would like to see, folks in the stock market, and even consumers. We're still a little early on that. I think the conventional wisdom right now is that at the earliest, we'll see a rate cut around March, maybe even as late as June. It's coming, and then, the Fed has signaled that we'll probably get about 3 rate cuts in 2024, but not just yet.
Lynnette, you know this as well as I do. Fed Chair Jerome Powell really keeps his cards close to the chest, but what economic factors is he looking at?
Well, he's looking at a range of things. It's not only growth and GDP, that's absolutely one factor. They're looking at core inflation, they're looking at unemployment figures, they're looking at durable goods orders. So there's really a mix of things that go into the calculus as to whether or not and when the Fed should cut interest rates.
There are others, as you know, who are concerned with the risk of stock market instability, high mortgage rates, of course, the global economic uncertainty. How much of a role do you think that will play going into the week?
Well, it is all kind of intertwined, but I don't think that the Fed is going to be moved simply by, say, stock market volatility. You cannot manage, monetary policy on the vicissitudes and the vagaries of the stock market, which, can be all over the place. I do think they are going to take a prudent, big picture look at the data and then decide overall, how can we best engineer this sort of soft landing? And it was interesting that you noted at the top there that so many people were wrong in 2023. You had all these economists saying, oh, we're going to have a horrible year, it's going to be a recession. And now they've all said, oh, wait a minute, not quite. It's a little better than we anticipated.
Lynnette, do you have any advice for all the consumers watching our show today?
I do. One is start paying down that debt, because the fact is those borrowing costs are extremely high for a lot of people. We know, of course, that the Fed's 11 interest rate hikes made mortgage rates effectively double, right? So somebody who's in the market for a home, I would suggest you probably wait until like the second half of the year until 1 or 2 of those rate reductions kick in. You'll get a better rate if that's what you're looking for. On the consumer credit card side, we've seen an explosion of debt, over $1 trillion in debt outstanding. Start knocking down those balances as well, because the average credit card rate is above 20% right now, and that's going to cut into your cash flow.
Oh, I've noticed that interest rate. Lynnette, thank you so much. Great advice. We appreciate your time. Thanks for watching. Go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.